Bag. Not one. Entire fucking.
I mean, how big is the bag?
It was like an adult size, like family size.
You finished
bag.
the whole thing?
I finished the whole thing. Okay. Welcome back to the #1 financial literacy podcast in the world. And usually when I say it, it's tongue in cheek. But Saied, what are the numbers this week?
Top 40 on Spotify? In
42.
business?
Number 42 in business on Spotify.
I mean, come on, let's round. Top 40.
We can round up. Yeah.
Yeah,
Let's just say top
Also, officially,
quartile.
congratulations.
Congratulations, you too.
Top 1% podcast.
Top 1% of
And-
all podcasts in the world.
Globally.
All of them
Every single one.
in the world.
Pound it. Yeah.
In any event, we were also number 66 in business in the United States as well, on Apple as well.
So this is our way of saying thank you to everybody who's listening and tuning in. We appreciate you.
And if you're new to the show, don't forget to like, subscribe, follow us on any streaming platform that you may happen to use, although we typically favor YouTube, Spotify, and obviously Apple Podcasts.
Yes.
So let's jump into it. This week we got a lot to talk to you about. We're going to start off with the Dow falling 130 points after the FDIC reveals a record plunge in bank deposits. And if you've listened to the show for any period of time, you know we fucking told you that a long time ago.
Hey, record plunge doesn't sound like sounding resilient.
No, you don't understand, Saied.
I'm sorry.
Uncle JP,
From the hood.
Mr. Powell, if you will.
Yeah.
He said that the sector is safe and resilient and sound and all sorts of really cool words to make you feel confident. Okay.
Yeah, that's what he did.
He would never lie to the American public.
Got it.
It's resilient.
We'll get into it.
You bet you will.
Lying ass.
We'll turn around and talk about U.S. rate futures. Expect the Fed pause in June in sharp turnaround from earlier. But Saied and I have our own independent data, and I got some stuff to talk to you about on the yield curve as it relates to that as well.
Okay.
That I happen to just remember right now, because looking at your pretty face, it just sparks up memories.
Cerebral.
It's very cerebral. Goldman Sachs is cutting jobs once again amongst Wall Street slump. I think the caffeine's getting to me a little bit. Yeah. Apple customers say it's hard to get money out of their Goldman Sachs savings account. Could be because of all the jobs that have been cut there.
Yeah, what's going on?
Yeah,
maybe that's why they're losing jobs.
Yeah, that might be a chicken-egg argument there.
Yeah.
Yeah. We'll talk a little bit about private payroll towards the end, maybe a little bit of downtown office space, and we're certainly going to talk about home prices, because what would an episode of The Higher Standard be if we didn't make fun of Dave Ramsey for a little bit?
Have to. And we have to talk about why the data is showing something completely different.
And when we do the Dave Ramsey segment and we make fun of him like we normally do, I'd like to point out that our friends from Mind Pump, all four of them,
Are you doing this?
Doug, Sal, Adam, Justin, all four were at his event. And I took the high road.
You did.
I did not make fun of anybody.
Some would say the higher standard.
I took the higher standard road. Yeah, that's it. And I was an adult, and I said, I hope you guys are having a great time. Choke on it.
Choke on it, yeah. I was going to say, choking on your steaks.
All right, this from Forbes. Dow falls 130 points after the FDIC reveals a record plunge in bank deposits. And this is a true story. Before the show started, Said's like, you heard about this, right? And I'm like, nope.
Yeah, I mean, this is not something you guys have been talking about in your daily meetings.
No, because this isn't us, and I'm sure it's a lot of other people. But this was interesting because it goes to show you that this contagion, these fears that you've been hearing about in the news, everyone's like, oh my God, regional community banks are so impacted. Well, it turns out all banks were impacted.
All banks were impacted. So U.S. banks lost $472 billion in the first quarter. That's the largest decline in 39 years.
That's a lot of paper, brother.
That's a lot of paper. But what this report did end up showing, it's a comprehensive report that they release. And what it ended up showing that a majority of the outflows were uninsured deposits. Insured deposits actually ticked up.
Because people were diversifying their funds amongst other institutions, but a lot of people were taking the non-banks to put stuff into, like, treasuries.
Right.
Yeah.
And then they also provide a list of problem banks in this report. And it used to actually be public, but now they keep those names of banks private and confidential. They just tell you the number of banks that are actually seeing problems.
Well, because the last thing they want to do is give you a list of banks who are challenged, and everyone's like, those are the banks you short sell. Those are the banks right there.
And especially if they're the ones going to be responsible to making those depositors whole.
Oh, yeah.
Yeah, they're like, we want no part of this. So that actually ticked up by 4 banks. It went from 39 to 43. But that sounds all bad, but when you look at it from historical standards, there's approximately, I think, 4,100 banks out in the U.S. So it's like approximately 1%. It's not a big deal.
It's not a big deal as far as like number of banks go,
Mhm.
but I think consolidation, M&A activity, and all the things that typically happen in a response to a cycle like this
Mhm.
are going to happen.
Yeah.
And I think that the Fed knew that going in. I think that's why you see Jerome Powell out in front of the cameras, not really concerned with the stress in the banking sector. That's why he says it's sound and resilient, because in his mind, 99% of the banks that are out there don't have a problem.
And especially because what it came out and said that the list of assets that are in trouble is approximately 15 billion. So that's tied into that. That's tied into that those 43 banks. And if you look at that, that would just by facto mean none of the 30 largest banks are in trouble.
Well, yeah, and not only that, but I mean, 15 billion relative to the entire banking sector is so small.
Yeah.
Like community regional banks are, 13, 15 billion. They're not huge.
Right.
So, direct quote from the article: concerns about the American banking system's health yet again sent the stock market tumbling Wednesday as one of the major indexes appears to poised to post one of their weakest May returns of the millennium.
Wow.
Not decade, millennium.
That's a big deal.
100.
Yeah.
100 years.
100p.
100p, dog. Bars.
Bars.
The Dow Jones Industrial Average fell 0.4% or 150 points by 3:15 p.m. Eastern, while the S&P 500 and the tech-heavy NASDAQ slid 0.5% apiece. Headlining the skid were bank stocks. All 10 of the largest U.S. banks by market capitalization dropped 1% or more in Wednesday trading, losing nearly $24 billion in value.
Wow.
Now, do me a favor, Arun. Go ahead and Google market capitalization. This is a term that gets thrown around a lot. I look at market cap or market capitalization quite frequently.
Yep.
And you can compare this relative size of one institution to another by looking at their market cap. If one company has a market capitalization of $1 billion, they're a bigger company than a company that has a market capitalization of, call it, $250,000. So market capitalization or market cap is the total value of a company's shares of stock. If the company has issued 10 million shares and its share price is $100, its market capitalization is $1 billion. Market cap is calculated by multiplying the number of stock shares outstanding by the current share price.
Right.
So the natural and likely probable situation of values coming down on stock prices, it means the market capitalization of that bank has gone down, in this case, banking sector. But if Apple's stock price goes down, their market cap goes down.
Right.
And that's how you compare the relative size of one institution to another institution.
So then what happens when companies are buying back their stock?
You reduce the number of shares on the market. So when you multiply the number of shares times the stock value, you actually get a smaller number.
Yeah, smaller number. Yeah, exactly. So would you say that that's an accurate reflection?
Yeah, I think it is. I think at any point in time, whenever you compare relative companies, I think it's an important thing to do.
Yeah.
Keep in mind, too, you typically buy back your stock when it's a good deal and prices are lower.
Yeah.
And you've got a lot of incoming money.
Yeah.
Retained earnings, right?
And in those cases, also the stock price tends to go up.
Exactly. So it offsets a little bit.
Yeah.
So in effect, really driving market capitalization back up with lower stock there, it helps everybody else. Less stock in the market should keep values the same if your value's in a good hold position.
Should be interesting to see what happens in tomorrow's market, actually, because we know as of tonight, what's the date today? June 1st?
Today's June 1st.
June 1st.
Uh-oh.
Oh, first of all, there's a lot to get into right here.
Sidebar.
Yeah.
So, Arun, go ahead and turn your mic on back there, Thickness, and let's talk about what today is.
Why?
Because
Why?
he deserves it, okay?
Hi, Daddy.
That's
wow.
the end. You call me Daddy. So we said that we were going to be respectful and kind and thoughtful about you being on the path to de-thicking yourself.
Yeah.
Yes, sir.
And today was the first day you had to work out. And I said I was going to harass the shit out of you out of love. And you did work out.
Yes, sir.
You went on a walk.
I did. We have a treadmill inside of our garage. We have a standing desk as well. So I worked and I worked out.
Good job, man. Honestly,
Standing
though,
desk in a walk.
Honestly,
Okay,
though,
yeah.
I'm proud of you.
I'll give you that.
Good job. Good.
All right.
But be honest. Was this triggered by my text this morning? Did anybody catch it? Neither of you commented on it.
No, I did. I'm not going to give him the satisfaction.
Odin, did you
of
catch
calling
it?
you out.
No.
Oh, I texted both of you guys happy June 1st.
Mm-hmm.
I was wondering what that was about. I was like,
I knew exactly what that was about. Happy June 1st was we gonna get this motherfucker tonight.
But no, so as of tonight, June 1st, I'm interested in seeing what the market does tomorrow now that we know the debt ceiling has been passed.
Yeah, I would expect it. I would be disappointed if we didn't see stock prices rise, but we saw a little bit in the market today. I think the sector and, frankly, all the major indices were creeping up.
Mm-hmm.
And it just blows my mind that on the House passing this and then it going to the Senate, which presumptively was going to pass it during the day before trading hours closed.
Right.
The entire market was trading positive on the idea that they were going to lift the debt ceiling. And I thought to myself, why is this so shocking?
Mm-hmm.
78 out of the last 78 times they've lifted it. Now 79 they've lifted it. Why is anybody surprised? Why did stocks trade down?
There's so much here that I'm upset with. By the way,
It's confusing.
There's I was doing some digging tonight on this. So when the House Republicans first started off these negotiations, and this is why this conversation is so frustrating. When they started off these negotiations, they said, we're not going to have these discussions. We're not even going to consider unless there's a 20% reduction in discretionary funding.
Yeah.
Okay? You want to know where that shit ended up at?
5%?
No. A freeze next year, so stagnant.
Okay.
So not only is it not a deduction of 20%, it's zero, flat line.
Yeah.
And then for the following year, because it's only a 2-year limit, a 1% increase. No deduction.
Sounds like they won. Yeah. Sounds like they got their way. Yeah.
No, so that's really because we knew, like, you're coming out, you're acting like this is a big problem. This is why Chris and I
We all know
knew
what they
the whole
wanted.
time.
They wanted to go on vacation in July.
Right.
They got vacations planned, both the House and the Senate.
Right.
They all want to go on vacation. They're like, listen, y'all got to get this figured out. Get Feinstein in a wheelchair out here. Let's go.
Right. So we know that they're just kicking the can down the road again. We have a real spending problem. I mean, the government overspends by $2 trillion every single year. This is why the debt continues to go up.
Somebody came to my office today and they was like, hey, man,
can you imagine? Just
you know what's going to happen one year? We're going to file bankruptcy. And I'm like, what do you mean by we? Like, the country. And I was like, he's probably right.
Yeah. Sorry.
He's like, what else are we going to do? And I'm like, we're going to go to war with Japan, who's our largest debt holder.
Oh, yeah, that's right.
Yeah.
Yeah.
I learned that after being trolled from the Mind Pump episode.
Right,
People were
exactly.
very upset that I didn't know that.
Very upset.
Like, I'm supposed to know, like, the world's, like, spending habits all the time?
Yeah, at all times.
I'm just trying to understand my own, man.
Just understand my own, run the bank.
Yeah.
Not a problem.
This is a basic financial literacy show.
Yeah, basic.
Yeah. So, shall we jump?
Let's jump.
Yeah.
What we got here?
Arun, focus. There you go.
There he is.
U.S. rate futures expect Fed pause in June in sharp turnaround from earlier, according to a Reuters article, except there's a wee bit of a problem here.
What's the problem?
According to the World Interest Rate Probability, there is a 70% probability. For those of you who don't remember what Bloomberg's World Interest Rate Probability, or the WIRP, means, it's that for every 100% probability, they expect there to be a 25 basis point increase.
Yep.
So in this case, they think there's a 70% probability of a 25 basis point increase at the next Fed meeting.
Right.
That is the consensus on Bloomberg. You had the Mercantile Exchange, right?
Yeah, Chicago Mercantile Exchange, and they're at, I think, 72.5% for a hold. And all the jawboning going around the last week, 2 weeks.
It's very confusing data.
They've all the Fed officials that have been coming out and speaking, they've said, we don't want you guys to get a hold confused with a complete stop in rate hikes. We now want to let the data, catch up, because we know after a 500 basis point increase, after the last year or so, we haven't seen the effects of that yet. Clearly.
I've been having so many arguments with people about this. They're like, oh, inflation's coming down. Like, it's all good, man. I'm like, is it really, though?
Right.
Just because you lost a couple pounds in the beginning doesn't mean you're, like, in fitness competition shape.
Right.
So, yeah, we've shed a couple, percentage points on inflation, but are we better? No.
Right.
And you know what the biggest indicator of that is?
Mm-hmm.
We are at the most inverted yield curve since 1981.
Wow.
So the 10-year treasuries are priced lower than the 3-year treasuries.
Right. Meaning it's more expensive to borrow money for sooner than it is for longer.
Because the long term is uncertain to some degree. But
Right.
what I will also say is that an inversion typically precedes a recessionary economy.
Yeah, always.
So, yeah. So there you go. Not only have we been inverted for a very prolongated period of time, but now the inversion's as deep as it was during the period of time in this country where we had hyperinflation and Volcker-era rate increases that were 50 basis points over and over and over again consecutively until they got 10% higher.
Right.
Interest rates to borrow on home loans during this time were 20%.
Wild, man.
Wow.
Absolutely wild.
Which, by the way, the world didn't crumble at 20% interest rates.
No.
It still moved on. So people
Right.
shouldn't like freak out and go, oh, my God, the world's going to end. It's just not going to be as easy.
What was the unemployment rate back then? Do you know off the top of your head? Oh, can you look that
For
up?
1981, I do not know. Unemployment rate in 1981.
Yeah. The question that I have for the people that are really upset at, rates remaining this high and the Fed just not cutting is, look, we clearly have a problem. If the Fed can raise 500 basis points and nothing has happened, really, nothing has happened. Unemployment's at all-time lows, right?
3.4% still?
3.4%, all-time
That's
low.
a problem.
Huge problem. So what is it? What do we got here?
Go back, I think it was 8.8%, but go back to where you were. There you go. The labor market, which received its second jolt in as many years, was experiencing precipitous declines by the first quarter of 1981. The number of unemployed reached 9.6 million, or 8.8% of the workforce by the end of the year.
Look, we're at 3.4% right now, right? And a lot of that is on the backs of companies believing that still hope for the second half of the year, still remaining growth. But that's where I think all this needs to get headed. I think the Fed truly understands that. They're looking at, the WIRP, Bloomberg's world interest rate probability. They're looking at Chicago Mercantile Exchange, and they're seeing that people are betting on cuts by the end of the year.
What's going on, man? I think they get in the room, the doors are closed, and they're playing dice.
Cornhole?
Yeah, playing cornhole. And they come out 3 hours later going like, oh, God. Oh, man, we've got to increase. And they have somebody else bullshit the minutes.
Bullshit the minutes.
Yeah, they're like, hey, man, Neil, Cash, get your ass over here, write some minutes.
Yeah, do some shit. Come on. Boast it. Come on.
Bro, you lost the game of cornhole, bro. This is what you do.
Yeah, exactly.
Yeah. Make the minutes up.
By the way, for the listeners that don't know, Chris and I were running the courts for a while. Now there's people out there playing all the time.
A cornhole?
Yeah.
Yeah, my brother tried to challenge me earlier tonight.
That's a bad move for him.
And he couldn't even tell I was gaming with him. I was playing with him the whole time.
He doesn't even understand. There's levels to this.
No, bro. He was just trying to get the bag in the hole.
Oh, come on.
Come on. That's amateur hour shit.
Amateur hour,
Yeah.
bro. Come on.
If you don't know about the cock block, if you play cornhole and you don't know about the cock block, this is an industry term. This is not my vernacular, okay?
Yeah. This is the industry term. Yeah.
Yeah. If you don't know about that, then
no, and this is
man.
not a joke. Chris and I actually we entered into a cornhole tournament.
Dominated that tournament.
Dominated. Not even kidding.
Won some bikes.
We won some Schwinn bikes.
Well, and then we subsequently had to give them away.
No. So this asshole.
I feel like we had to give them away.
Tell the story accurately.
That's what happened.
No.
That's the way I recall it.
Chris just didn't want to take the bike home because he was lazy. And he said, I don't need this Schwinn cruiser bike. That's
didn't feel like it was
like
masculine.
$1,000.
I felt like you could probably pull that off given your body fat in feminine positions.
But if you're gonna diss me, don't stutter.
I know.
You got to deliver all the way.
I wanted to pull it back a little bit because I was worried about hurting your feelings.
Yeah, no, come on.
I know you've got feelings. You've been very sensitive lately about the level of body fat you've been carrying around.
Come on.
You gonna look me in the face and tell me in the bathroom right now when we walked out you were doing the little titty bounce thing and the shaking your shoulders? It's very awkward for both of us.
Yeah.
There's a lot of jiggling going on.
So Chris donates his bike, and then because he donated, I felt like I needed to donate mine too. I wanted to take mine home.
You should have taken it home.
No, couldn't be.
Look, we all know you're the villain.
Yeah. Wow.
Everybody knows.
Come on. Man.
You didn't avoid this. You just prolongated this time for people to figure it out. But we know now.
Don't do this.
Chris, quick question. How many lunches do you owe Saied?
Oh.
Yeah, we used to bet lunches when we played cornhole, and
that escalated to college tuition funds.
So in my mind, logically, we were gambling with like fake money.
Right.
And it was always good to just keep doubling up. Well, I took a lot of L's back then.
Yeah, and I kept doubling them too. It's fine. Even if I lose it all, I'll gain it all back.
Yeah. So I owed you like 1 million lunches or something.
I was like 4 million.
Yeah, it was not a good gambling.
Right.
Gambling on our part.
Yeah, I miss those days.
Yeah. Back when we were actually physically in the office every single day and not working.
No, we were discussing deals.
I know. I'm just giving you shit.
Come on.
It's fine. I mean, we were kind of working.
What's going on in Goldman Sachs?
Goldman Sachs is having a bit of a rough couple of weeks. First, it starts with a little bit of they're cutting jobs, according to CNBC. Goldman Sachs cutting jobs again amid Wall Street deals slump. Goldman Sachs preparing for its third round of layoffs since September as Wall Street firms adjust to a slump in deals activity.
They're one of the leaders actually in on Wall Street to first cut jobs. I remember.
They were, yeah.
Yeah. But this goes completely against what private payroll came out. I think today or was it yesterday, where the numbers are going again in the wrong direction.
I don't understand where these private payroll numbers are coming from. Who the hell is hiring?
So maybe we give a little bit of a backstory as to why these reports are so important, because this is different from the jobs report.
Because they lag.
They lag. Yeah.
They
well,
lag.
Private payroll. This is a report that's produced by ADP. They're private, right?
I don't know.
Oh no,
ADP, are they private or public? I think they're public.
You think they're public? Well, they I guess they handle payroll for maybe a lot of private companies.
Yeah, they're
maybe that's
deal.
what it is. So they handle the payroll for a lot of private companies.
Mm-hmm.
So they're able to provide a report, to the public on payrolls increasing,
Mm-hmm.
right? So basically, what the numbers came out and said, private payrolls rose by 278,000. The Dow Jones estimated 180.
That's not good.
Not good. April was at 291,000. So clearly we haven't seen the effects of this is what we mean where we haven't seen the effects of a 500 basis point increase. If the Fed can raise 500 basis points, meaning the Fed funds rate is now 5 to 5.25%, and unemployment is staying at 3.4%, and nothing is changing, that's alarming. That should be very alarming that it's taking this long for us to see change. There's back to our conversations we had back in the day, there's no elasticity.
Retro. I like that throwback.
Yeah.
ADP went public in 1961. Thank you, Arun, for pulling that up. Yeah, so elasticity returning to the economy. And this has always long been the supposition of the show, so I don't want anybody to listen to the show and think, okay, what the hell is this? We talked about it in early episodes, and we still talk about it on an occasion, but certainly not as to the frequency and cadence that we once did. If you take 14 years of artificial interest rate deflation and you deflate the economy,
Yeah.
in order to get things back in motion, it's just like physics. You've got to push really, 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 really hard to get this energy back in the economy, to get this elasticity back in the economy where things swing evenly and fluidly throughout the year and responsively to respond in a positive responding or negative responding way to the Fed monetary policy.
Right.
People are seeing the Fed take giant steps, and even myself, who's been very critical of the Fed in this regard, you look at the steps they're taking, but you're not seeing the responsiveness. You're not seeing this pari passu return. Yeah, inflation's coming down,
right,
but unemployment isn't rising, and wages aren't coming down.
Wages aren't coming down. And just as a recap because we got a few new listeners.
We got a lot of new listeners.
A lot of new listeners. So thank you for jumping on board.
Yeah, welcome to the show again.
Welcome. But this is what needs to happen. This is why the Fed is tackling wages and employment. People wonder, how does this impact everything, right? If unemployment goes up, then companies out there that are hiring don't have to offer new employees as much money, right, for their positions, making wages come down, ultimately causing services to come down. Because if wages are going up, those new costs to companies are getting passed on to consumers, right? So that's why that subcategory in inflation, the services portion of it, is the part that's remaining high. We've already tackled goods inflation. That's now come down. But services is what's really keeping this up. Shelter is what's really keeping this up.
So no bigger indicator to me, since I've been doing all this traveling, these airplanes are packed. I keep sitting around looking. I look around the plane. I'm like, what are y'all doing here?
You look behind you because I know you're not in Gen
Don't
Pop.
do that. Don't do that.
Don't just be honest.
No.
If you're going to paint a picture, you're looking down the aisle in the back.
That's a very elitist and disparaging thing to say. I actually flew Gen Pop to Hawaii.
Listen, when we went up to San Jose and you weren't sitting 1A, you were sitting 1B, you were very upset.
First of all, that's a Southwest flight. Okay? The position that you get because you walk on the plane is very indicative of your financial success. Okay? Don't judge me with that shit. Okay? I want you to see me eye to eye when you walk in the plane and go, how did that motherfucker get in the front?
Yeah. This guy with his Travis Scotts.
Yeah. Nah, man, I'm big, dude. I don't like sitting in bad seats on planes. And it wasn't just that. On the flight back from San Jose, I was sitting in the middle between two lovely ladies, and
What made them so lovely?
They were very pleasant to sit next to, and we were rubbing thighs the entire flight and talking about all sorts of stuff. And truly, they were lovely ladies, but there wasn't a lot of space for me to move.
Yeah.
And the guy in front of me leans back, and you're dealing with like not a lot of space.
Right.
And I thought to myself, never again. Never
again.
doing this shit again. Never.
Yeah, never.
I don't care. I know it sounds arrogant as shit to say that I don't fly like
Right.
unless I can get a good seat.
Mm-hmm.
It's about comfort, man.
Right. And so and that's packed. I know that for sure is playing a huge role in this, but also construction. Again, added jobs.
Yeah, I don't get it.
I don't get it. Let me see here. 64,000 jobs.
And I don't know. That's the part I don't understand. Like I don't know any lenders that are making construction loans right now.
Right.
I literally got back from a conference from New York like 2 weeks ago.
Mm-hmm.
Everybody was like, "We're out of construction. We're not doing construction."
Wow.
I don't understand. I've just theoretically, the premise of people going, "We're going to pay for people to build properties right now," it blows my mind. Who's taking that risk? Not to mention the fact that the materials cost is still high. But the services cost, the GC cost, is super high. Try to find somebody to do work in your house.
I wonder how those get added. Like, the people that are working on like the roads and whatnot, every time they finish a job and they get a new job, is that considered? I wonder. I want to look into that.
I don't know. Yeah, it might be sector.
Maybe something like that. That's why they're consistently getting new jobs on these reports.
Yeah, maybe. I don't
know. We'll get into it a little bit. We'll get into it a little bit later because when we if we have time to tackle the downtown LA commercial real estate.
I almost want to go to single family stuff right now, but I also want to make Apple look kind of like assholes. So I'm very mixed emotional.
You know this isn't Apple though.
I know. So according to the Wall Street Journal, Apple customers say it's hard to get money out of Goldman Sachs savings accounts.
God damn. That's so fucked.
I'm pausing for emphasis.
Yeah. Everyone trusted Apple. Everybody.
Some say it has taken weeks to withdraw their money and that the bank's instructions have differed.
Yeah, so I know you didn't get a chance to read this because I put this in last minute. But what people were complaining about is they weren't able to transfer money. Let's say they transfer money from like an American Express savings account and into this, okay? Mm-hmm. And now they want to take that money and transfer it into like their Vanguard account. Apple holds it because it's a large amount. They have to do their anti-money laundering, due diligence. But for whatever reason, their Goldman Sachs due diligence process is taking like weeks. So people can't put them into their investment accounts.
I have a theory.
Because they're being held. Okay, I want to hear your theory in a second. But now, what Apple was making them do, and there's a couple different stories cited in this article. You first have to transfer the money back to where it originally came from.
No, really?
Yeah, so they'll deny it, say, okay, no, it's got to go back to American Express, and then you could do it from American Express, you could take it over there.
Wow, they don't want any layering. Okay, I know exactly what's happening.
Tell me, break it down.
I will break it down for you. I want you to look me in the face when I tell you the secrets of the sector.
Got it. Okay.
If you're driving out there, I want you to know you're being privy to a lot of information.
Yeah. Maybe give a little background, too, on anti-money laundering.
It's not really anti-money laundering. It's not.
I mean, they're citing AML.
Are they really?
Yeah.
All right. Okay. Well, maybe that's what it is. So, here's the problem: is that Apple decided that they were going to release this product at 4.15%, a savings account, a high yield savings account. Correct?
Correct.
And when they came out with this, I believe they were number 11 in the country as far as rates go. They weren't the number 1 or number 2. They didn't come out with the highest possible rate. They were number 11.
They also knew that they didn't need to because they were viewed as a trusted
They're Apple.
source. Right.
And a couple of clicks and your money's over there.
Right.
What people didn't realize was Goldman Sachs was the bank behind this.
Mm-hmm.
But Apple also knew that they were going to try to temper the amount of early adopters by saying you had to have a credit card with us. And the reason why was this product was really designed to be where they distribute cashback rewards from their credit card.
Oh, interesting. Okay.
That's what this was really designed for. And they said, oh, by the way, if you want to bring us money, you can do this. I don't think Goldman Sachs had enough employees to handle the transactional volume that came through.
Yeah, like they didn't understand what they were in for.
Arun, I know we quoted on an earlier show. While I'm going through my theory here, see if you can find how much money Apple's savings account generated for them in the first couple of weeks. I guarantee you it's going to be monumental.
I remember that article. It wasn't in the first couple of weeks. We cited the first day.
Yeah, it was insane.
Yeah.
So what I think happened was, typically speaking, Goldman Sachs isn't going to have a level of granularity that came in, micro deposits that came in through all these accounts. It wasn't a ton of money that came in through just a few select people.
Right.
It was a ton of people transferring in a little bit of money that made up that huge volume of money.
Right.
I don't think Goldman Sachs or Apple was in any way, shape, or form prepared for the volume. Apple's new savings account draws nearly $1 billion in deposits in first 4 days.
Come on, dude.
Yeah.
$1 billion?
And these are not massive deposits on average. I guarantee you they're like
Right.
a couple $100 here
You
and
know,
there.
when we did our research on this, I originally thought that these accounts were capped at a maximum, but based on that Wall Street Journal article, people were trying to transfer out like $100,000.
So this is a very common thing with people in this space, and I don't know why people do this. I will say now more than ever it makes sense to me, but for a long time people would rate shop online, find the best possible rate, and just transfer money wherever they could to get the best possible rate.
Right.
But when you're talking like 1% or 2% rates, and you're thinking you're throwing stuff around for 10, 15 basis points, or small percentages of a percent,
Yeah.
it doesn't make a whole lot of money.
Right.
It doesn't make a whole lot of sense either.
But now with
people
some
did it.
places giving 5%.
Yeah, if you're going from 3% to 4% and you got a couple $100,000, that can make money, especially if you spread it out.
Right.
But people were worried about the security. So what I think really happened here, so BSA, AML, right, is Bank Secrecy Act and Anti-Money Laundering Act, I believe.
Yes.
To make it really, really simple, and I'm going to butcher the shit out of this, and my friends in compliance and risk will probably get mad at me. Basically, banks have a responsibility to make sure you're not money laundering, that you're not stacking, that you're not on a terrorist list, that you're not on some kind of watch list,
Right.
and that they have to run your name through these checks and have to make sure that you are legitimately spending money around, because it can be very easy for, let's say, you, Saied, to be somebody who's on a don't do business with list somewhere,
Right.
to send money from your American Express account to Apple and then out to somewhere else, now making it look like trusted funds that came from a trusted institution,
Absolutely.
when you don't know if that person truly met the BSA AML standards. And some banks try
Right.
to rely on the fact that, it came from a bank we know,
was
like
gonna
American
say,
Express.
Yeah, but they shouldn't.
They shouldn't, and they do have a responsibility, a fiduciary responsibility as a regulated institution, particularly an FDIC-regulated institution,
Right.
if they offer FDIC insurance, which Goldman Sachs does.
Right.
So it is not so easy. So the reason why they're sending it back to the institution it came from is they don't want to have to deal with having to do the due diligence.
Absolutely.
Yeah, so they're clearly oversaturated with work and not enough employees to review all the material here.
Right.
And look, it's not an easy process. And for a lot of these tech companies that jump in this space with a product that's really a white labeled bank product, if they're successful, they inundate the institution.
Yeah.
Because they're just not prepared for this level of granularity. Goldman Sachs could have never in a million years launched a product that would have drawn in this many deposits from this many individuals in this short of a time ever.
No
matter what. They could have offered 6% rates and they wouldn't have the adoption that Apple got. It's Apple, baby.
Apple, baby. Oh, dude, can you also do me a favor, man? We're putting this guy into work tonight, poor guy.
I know.
Can you do me a favor? Can you look up, see if this information is out there? How many people have Apple cards?
He can burn calories typing, right?
Come on, man.
What? I'm trying to help him lose weight.
He's laughing.
Yeah, I can hear him laughing in the other room.
What was the question? Sorry?
Can you please Google how many people have Apple cards?
Oh wow, how many Americans have Apple cards?
Yeah.
Just how many people in the world?
Yeah, how many people have Apple cards that even could open up an account?
Probably all in the U.S. Apple Card is a credit card created by Apple Inc. and issued by Goldman Sachs, designed primarily to be used with Apple Pay, like I told you, and on Apple devices such as an iPhone, iPad, Apple Watch, or Mac. Currently, it's available to only the United States with 6.7 million American card holders in early 2022.
So I wonder how many of those 6.7 million Americans made up that
$1 billion.
$1 billion.
It had to be a lot of them.
Yeah.
I would say probably half.
Yeah, I feel like if you got an Apple card, you're an Apple fanboy.
Yeah, dude, I wanted one so badly. No, you know what? I'm not gonna do this to you. No,
Do it.
no,
Come
no,
on, finish that thought.
Nope, you're not gonna get that from me.
Come
Nope.
on, come on. Oh, dude.
No. All right, I will tell you a funny black card related story that happened to me today. Okay.
Wow.
So I got this email from Hertz and the rental
Let's
car
go.
service.
Yeah, let's go.
Right. So.
That's their slogan. Hertz, let's go.
Oh, is it? I thought you were mocking me. I was ready to slap you.
I thought he was pumped for the story.
Yeah,
Like,
that's what I thought he was too.
No, I only know because Tom Brady's on those commercials.
Okay, dude, the knowledge of sports shit that you maintain. You know how fucking brilliant you would be if you just purged that.
Yeah, Said. Come on,
Yeah,
man.
I mean, it was because I joined the show.
Arun, you know better, bro. You know, but stop. But some of the random sports shit that both of you guys know.
Yeah.
I mean, you could fill that with like soliloquies and like
If you're gonna make fun of me, don't
beautiful
stutter.
poems.
If you're gonna make fun of me,
No,
don't
it's
stutter.
actually called a soliloquy.
No, but you said soliloquy. That's what you said.
I do have an enunciation problem.
Sometimes.
Yeah, it's been going for like 10 days.
Yeah. Okay. So back to the story.
So the perks of having a black card?
Yeah, in Hertz, what's going on?
I don't like either one of you at the moment right now. I'm just telling you. So I get this email from Hertz saying they've upgraded my account to like this platinum account. I've never heard of it before, right?
Mm-hmm.
But I did have one experience with Hertz, which made me like a brand loyalist for like the rest of my life.
Oh, okay.
I was stuck in Dallas, and I had to drive through 3 tornadoes, and the airport was packed, and everybody canceled my flight to Houston, right? So everybody's flight got canceled, and there were several flights that were going there, and the airport was just swamped, and the storm was coming in. All the rental car places were packed, and I didn't know what the hell happened, but I just logged onto an app, I just picked Hertz randomly.
Yeah.
And they gave me like gold, platinum, whatever, or gold status or something like that, and my name showed up on a sign. I got the last car in the parking lot, and there were hundreds of people in line for them specifically, an hours-long wait, and for some reason, unbeknownst to me, turns out later on that my American Express concierge service signed me up for that account a long time ago.
Wow.
I just never actually used it, so whenever I logged in the account, it recognized my name and the card associated with it and automatically upgraded my status and gave me the last car there.
Wow.
But because they did that, I was able to get to Houston for my meeting the next morning, and I drove through like the tornadoes and the whole thing.
Unbelievable. There was a mom there stuck with her children.
I see. I knew you were going to do that. I didn't know who was stuck in a line because I didn't look.
No, you said you looked. See, look, there was hundreds of people.
Yeah, but I didn't look at the individuals. I'm very blind without my glasses on from a distance. I saw lots of bodies, but I don't know if I saw any little people.
What an asshole.
In any event, so it was a tremendous experience, and they really bailed me out of a really shitty situation because I probably wouldn't have made it otherwise.
Right.
So I get this email today saying upgrade you to platinum status, and I'm like, great, cool, this is awesome. It's got all sorts of crazy perks I never even heard they offer. Like if you wanted to go pick up a car for me, I could give you my number and my code, and they would let you pick it up for me.
What?
Crazy, right? The guy explained this to me. I'm like, what? If you fly like a private plane or something like that, or you want your car, they will drop off a car to a location you tell them to drop it off to at a time for you, and it'll just be there.
Wow, that's concierge.
I mean, level this. I'm like, the guy's explaining all these like things to me, and I'm like, this is Hertz, right? And he's like, yeah. And I'm like, you have a private access number, like all sorts of weird ass perks. Everybody in your family or domestic partner, if you have one, they whatever. Everybody gets hooked up.
How do people keep all these perks straight and in line? I feel like, how would you remember this when you need it the most?
I don't know, but they fucked me though. They fucked me. So I get this email. I'm like, these perks are great, right? So it's 3 steps, and they upgrade your account automatically. Step 1, enter your zip code. I could do that.
Easy.
92603. Boom.
God, wow.
All my information comes up.
Mm-hmm.
Oh, that's me. That's my address. That's my name.
Yeah.
Cool.
Confirm.
No. Enter in your driver's license.
Okay.
I can do that.
You got
I got that memorized.
Yeah.
Enter its expiration date. Got that too. Enter in your telephone number. Sure, here. Enter in your credit card number.
What?
You guys already have that on file?
That's weird.
But okay. Click. Another screen comes up. Little pop-up comes up.
Mm-hmm.
There's no place to enter your credit card number. It says credit card number, but nothing else. I'm like, okay, it's my browser, right?
Oh, okay.
Hit submit anyway. See if I can get to the next screen. It says, no, you got to fill in your credit card number. Everything else there. I'm like, that's weird. So now I can't go to the 3rd screen.
Yeah.
Switch browsers. Nope. Every browser I try, same thing. Go to my iPhone, same thing. Y'all send me an email to sign up for some shit I can't sign up for.
Yeah, that's messed up.
So I call the number. It says, you have any problems? Call here. Feel free, call here. It's concierge service.
Yeah.
First girl I talked to her for like 15 minutes. I swear to God, I thought she was in the Philippines. My wife's Filipino, bro. Like, this is not a knock.
Yeah.
She just had a heavy accent, right?
Yeah.
And then I was like, so finally I got so frustrated. I'm like, you have anybody else that I can talk to? Maybe somebody domestic here?
Wow.
And she goes, I'm in Florida, sir. And I go, oh, shit.
You're an asshole, dude.
So she transfers me to this guy named Chris Houston. Stud, very articulate. He had way better podcast voice than I do.
Okay.
I mean, he's articulate. I explained this whole thing to him. I sent him an email, like link and everything else. He tries it and he goes, yeah, do the same thing for me. I'm like, it's fucked up, right? And he goes, yeah, it's fucked up.
So I come back
Yeah.
then?
And I'm like, Chris, if you could do me one favor. He goes, what's that? I said, could you apologize to the girl who transferred me to you? I didn't know.
You got to ask, man. I always ask you guys, where are you based out of?
No, she had like full accent. She even did the sir, ma'am thing. I've been in the Philippines. I love the culture. I'm not knocking her.
Sir, ma'am thing? That's just respect, dude.
No. In the Philippines, like everybody's yes, ma'am, no, ma'am, yes, sir, no, sir. Everybody, they were very proper.
I call everybody sir and ma'am too.
No, I do, and I respect it. But there, it's like a colloquial, like normal thing for them to do
man,
there.
Come on, you made an assumption.
No, that's a huge part of the. I made an assumption based on maybe she was newly to the country.
Wow.
No, there was there was a language barrier there. I'm telling you, man.
Let's go. Let's go. Believe this here.
Don't make me a bad person. I'm just sharing a story that happened to me. Could you empathize with me for a little bit, please?
Not a little bit.
Don't paint me out to be a bad person.
Not even
Arun,
a
you ever
little
done that to somebody before? Thought they were not from this country? They were.
100 times.
See, 100 times.
This guy bails you out every time. Every time.
Because I'm honest.
Because he's honest and he knows that authenticity sells. You should try that. You wouldn't have so many people trolling you.
Me.
Okay, they trolled me, but that's fine.
So what are we moving on to?
Job openings show surprise increase in April, according to Yahoo Finance, which I will point out later in the show how they are lying assholes over at Yahoo Finance.
So yeah, this is
That's
just
foreshadowing the business, kids.
This is just more data showing that employment's headed in the wrong direction. So this is from JOLTS. This is the job opening labor turnover report that comes out.
Which is the world's worst name for a report. It sounds sexy as shit.
Yeah, when they reference it, they try to sound all cool. You see
JOLTS reports.
You see the Jolt? Yeah.
Job openings increased to 10.1 million in March of 2023. Hires rose slightly to 6.12 million. And just to paraphrase all this for you so we can move on to a sexier topic.
Job openings, that's actually, I think it's a typo. It's 10.1 million for April. In March, it was 9.75 million.
Look at you correcting the Yahoo Finance liars article. And this is why I got beef with Yahoo Finance.
Yeah.
I will tell you right now, firsthand experience, they fuck shit up all the time.
Yeah, exactly. All the time.
All the time. Unreliable Yahoo Finance. Shame on you.
Unbelievable.
Anybody from Yahoo listening to this, give us a call. We'll help you correct your shit.
Yeah, and if you want to sponsor, this would be a great time.
In which case, we love you.
Yeah.
And we welcome your spend on the show.
And if you're listening to the show and you haven't left us an honest 5-star review.
I did that in the beginning. You can't go back to that now.
I mean, it's worthy.
Okay, fine.
Yeah.
Sell it. Just do it sexy. Do like an accent or something.
Come on, man.
Wait, let me zoom in on you real quick.
Yeah, go ahead. Zoom in on him.
No.
Get that camera on him. There you go.
Yeah, boy.
Listen,
All right. You got English?
We're not.
Hello and welcome to the I Stand. Come on, go ahead.
No, you're the guy with all the
sell it, bro.
accents. No, not me. That's not me. I'm just saying the numbers aren't reflective of how many people listen to the show. And all we want is some love. We're not getting paid for this.
Oh, I am though.
Look at the camera when you talk.
Get asked out over here. So in addition to the 10.1 million job openings, that's creeping. I think now that's back up to 2 job openings for every unemployed person.
That's crazy to me, man.
Yeah.
The Fed is trying hard too.
Trying hard.
And the data, they want the data so badly to go their way so they can actually have like a pause and say, hey, we're done with the interest rate tightening cycle. They've done everything they can to put a caveat around. We're going to wait and see.
Right.
We're going to see what's going to happen. We're going to look at the data.
Right.
Which, fine, if you're a fan of Milton Friedman and his monetarism theory, that was his thing, right? As somebody who's in the government, whose job it is to control fiscal policy, you should not focus on your intention. You should focus on the results. And the Fed is saying the right thing. They're going to look at the data and make decisions, the results.
Right.
But the data ain't 100% all gravy, gumdrops, and lollipops. It's not exactly going the right way.
So this reminded me what I wanted to get to this earlier, but you
reminded you?
You had moved on. Yeah. What
I
I
move
think
on from you
what
a
I
lot,
what I think
Saied.
what I really think the Fed's going to have to do, and what I think that they realize they're going to have to do, is they're monitoring what's being reported on the Bloomberg World Interest Rate Probability. Okay, they're monitoring what's going on the Chicago Mercantile Exchange, on what the public seems to believe the Fed funds future market is. Okay, and now we know that a lot of people have guaranteed 2 rate cuts by the end of the year.
Which is insane to me.
Which is a complete opposite of what Jerome Powell and the homies.
They have literally said, and I'm not overstating, this is a quote, we're not cutting rates in 2023.
Not going to happen.
No.
Right?
Not going to do it.
So for that to be the expectation, to me, is outrageous, that there's going to be 2 rate cuts, right? I think by September, what those reports are saying, or what those charts are saying, is one of them will have happened by September, okay? I think what the Fed's going to have to do is continue to hold at the bare minimum, if not raise it one more time. I'm not saying that they're going to. That's not a prediction. But definitely hold it until they break that expectation of a rate cut. And then I think the market will adjust and realize, oh, shit, they weren't playing around. They were being serious.
The grim reality that's in front of us is not so fun. But, okay. So we've said this before on the show. I'll say it again. The stock market is essentially just a discounted cash flow analysis. If you expect companies to make more money, people buy them. They buy them more and more and drive the price up. And as you drive the price up, you believe that company is going to make more money in the future. You believe a company is going to make less money, you sell the stock and drive the price down.
Right.
And you believe that the company's going to earn less in the future. Now,
Right.
earnings, gross revenue is only one part of it. It's their expenses too. It's really the earnings per share or their earnings after, so their income minus their expenses and their earnings that truly matter. But that is the discounted cash flow. That's really what the entire stock market comes down to.
Right.
And some companies have behavioral economics behind them, like Tesla, who never made any money and they weren't doing that great, but people believed in them fundamentally that this company is going to change the world. And those are rare.
Right.
But those do come along and those change sectors. Sometimes people get it wrong. Like, look at Uber. Everybody thought it was going to come along and be profitable right away. It took a long time for them to build traction.
Right.
But they were building a new sector, an unprecedented kind of business, if you will.
Mm-hmm.
So the market is not rational right now. We know sooner or later consumer discretionary spending will pull back. Bank stocks are getting hit right now because people expect banks to make less money. And why? Simple.
Mm-hmm.
Banks primarily make money on the net interest margin, the difference between what they pay on average for all their deposits to you, the consumer, the difference between what they get in loans from you, the people they make loans to.
That's broken down in the most simplest form.
The simplest form. So that difference, that net interest margin, the difference between one and the other, the arbitrage of the two numbers,
Right.
loan rates are usually higher than deposit rates, usually.
Mm-hmm.
That difference is how banks make their money. So we know that banks are going to make less money because deposit prices ramp up really quickly. So you come to me and say, Chris, I want to change my deposit price. I can't do that to you, the consumer, on the loan because you got a fixed loan for 3, 5, 7, 10, maybe even 30 years.
Right.
So I got to wait till you refinance or I got to put more loans in the books in order to move up that weighted average number. So we know that banks, regardless of size, globally systematic, important banks, Citi, Chase, Wells, B of A, community banks, regional banks, all of them are going to make less money than they had the last couple of years. So their stock prices trading down are the natural, logical conclusion.
Right.
But why does it stop there? Why hasn't this impacted other sectors? The Great Depression, the entire market fell off the cliff
Right.
during 1929. October 29th, 1929.
I think what it is ultimately is it goes back to the expectations influence behavior, right?
Okay.
So if the expectation based on what we're seeing in the Fed funds future market is that there will be rate cuts, that the expectation is there's still room for second half of the year growth, until that gets broken, things aren't going to change. Because people are still out there spending. We cited it, consumer spending, right? That's at what? Consumer debt's now at $17 trillion, right?
Yep, $17 trillion.
$17 trillion. The people are still spending.
Mm-hmm.
They haven't. They're not willing to accept that there's going to need to be change, and you know who this is really going to hurt in the long run, is all those landlords in downtown LA.
The segue was fire. That was good. I didn't think you were going to go there so soon.
Yeah.
So the article that we have in the show notes, and this is actually a good time for us to pause. If you listen to the show and you're newer, if you go to Apple, you go to Spotify, we actually post in the show notes the links to all the articles we talk about. So if you want to go and actually click on one of these articles, they're all there. If you also subscribe to our newsletter, we will email them to you. We try to keep the emails down because we don't want to send out 2 emails a week to you.
Yeah.
But we will absolutely email them to you. But if the best location
we're not like
for
those
you,
other companies.
No, we're the companies that when we send you a sexy image,
Yeah.
you're gonna look at it and go, God, I am so appreciative to get this email.
I
from
love
them.
that they don't annoy me.
It's informative, and why is Saied topless?
That's not true.
No, it's not true. But let me tell you right now, I played. Arun and I were at my house the other day, cussing you out and making fun of you for not working, and we downloaded the beta of the new Photoshop where you can literally like circle something and it has generative fill and just say like fill it up with this.
Yeah.
That shit's unbelievable.
That's why you guys made me look so fat.
No. We didn't do that. We told Photoshop to make you look how you should, and it chose fat.
Oh, I should be fat.
And it gave you, for some reason, this weird man bun thing, which I thought looked quite good on you, despite your disdain for long hair.
Yeah.
You could pull it off, bro.
Hey, you look like Maz Jobrani.
It did make my forehead bigger, which is already big.
Yeah.
Can we take before we get to the apartment complex, and I'll explain why I talked about the linking thing in a minute, but somebody came at me in the comment section of one of the Mind Pump reels.
Yeah.
And said, who fish hooked his eyebrows?
Wow.
And I'm not going to lie.
That was good. You got to give kudos.
They are kind of pointy. Like,
why?
Why didn't y'all tell me this shit?
I made fun of your eyebrows for a long time, and you got mad at me.
I just didn't realize there was like a sharp. I looked like a fucking cartoon character. Nobody said that fucking word to me ever.
I made fun of your eyebrows, and you got mad at me. Said I thought that was my best attribute.
And then I did say that to you, didn't I? Yeah. On the Mind Pump episode, why were they so like perky?
Yeah, you were a little.
Was I too hyper?
You were hyper. You were. I don't know. There's a lot going on.
I don't.
You kept rubbing your ear too.
Because there's a bump on. It's still there. There's a bump on the back of my ear. It's weird. I'm very concerned about it.
Mm.
And I can feel you looking at my backside of my head. It got hot.
Yeah, because I was behind you.
Like Eddie Murphy Raw.
Right.
Very far behind me.
Yeah, because I'm capable.
Kudos to you.
Yeah. Thank you.
I can sense your presence
There you go.
all the way across the room.
All right, get into this.
So this article from Bloomberg talks about downtown LA's office distress shows the pain coming for cities. It was an interesting one of those interactive articles where you scroll up and like images like overlay over one another.
I thought honestly when I kept refreshing thinking it was a messed up article.
Yeah, so Arun, keep it right there. From a distance, downtown Los Angeles can look like the Wizard of Oz's Emerald City with smog. A shimmering skyline with the Hollywood Hills and San Gabriel Mountains forming a picturesque backdrop. Up close, its buildings tell a bleak story of the turmoil roiling U.S. commercial real estate. So what it basically comes down to is it points out several office buildings, almost all office buildings about this article. There's some other stuff here.
Mainly highlighting Brookfield Corporation.
Yes, and the debt that they owe because they've gone into foreclosure on 4, I think it was.
Was
it 4?
I think 2 and 4 are in trouble. 2 have defaulted.
Okay, yeah. It's been a while since I read that.
One went into receivership.
But the most interesting chart that I thought was worthwhile to look at was the one right there that everyone just pulled up. Well timed, brother. You were on one today. See how functional you are when you work out, man? See, this is incredible. Honestly, I feel like you're brilliant today. Right? It's just.
This is a bit much. You're going at him a little much.
Hey, villain, come on, man. Give me a compliment.
That's a positive reinforcement. The guy did what he promised he was going to do on the day he said he was going to do it.
Yeah.
Chris is giving me kudos and Saeed's just downplaying it.
Yeah, you are downplaying the man's kudos. Can you call him? Give him a compliment.
I'm going to stop working out. Thanks, Saeed.
Oh, geez.
See? Look, don't do that. Give him a compliment. He needs to hear it.
Fault.
Say something nice about him.
You look great, man.
And you laughed
you.
afterward?
Fuck you.
That's fucked up. Tell him just say something nice to him. Go ahead.
I'm proud of you, man.
Thanks, man.
Yeah. There you go.
Don't.
Back to this article, man.
See, you're just doing yourself a disservice. All right, so the cities face a growing glut of empty buildings, office vacancy rates of major central business districts. I love this chart, okay?
Okay.
Compares Houston, Los Angeles, Atlanta, Chicago, San Francisco, D.C., Seattle, Philadelphia, Manhattan, and Boston. Now, San Francisco, as we know, office space has had a huge increase in vacancy, right? They're well above 30%.
Right.
What was interesting to me was to see Los Angeles has always had a pretty high vacancy rate.
Yeah.
Since, the start of the pandemic anyway.
Right.
You're talking 20% to probably a little bit of a peak up to 30%. So we haven't seen vacancy cap out there, but look at Atlanta's sharp increase.
What we do know is when these guys get loans, they push their loan amounts pretty high to that threshold, right? So
these are also institutions too.
If vacancies go up 5% in some cases for a prolonged period of time, that can really hurt their cash position.
And it's going to, but if you look at all of these major markets, they're all on the increase. And
Yes.
Houston and Los Angeles in particular.
Damn, San Francisco.
San Francisco is like a straight vertical line up. But look at Chicago, it is too. Look at Atlanta. Look at Seattle.
Yeah.
Seattle went from below 10% to above 20%.
Shout out to our Seattle listeners. We know you're
We
out
got a
there.
lot of Seattle listeners out there.
I love our Seattle
I
listeners.
love every single damn one of you.
Yeah.
If you're in Seattle right now, pull over and hug yourself. That's from Saied and I. We
That's
love
good.
that you love you.
Yeah, exactly.
Hashtag blessed.
Hashtag blessed.
But all of these are on the upward tick, and they're very concerning. But look at how far Houston started. Houston started well above 20%, peaked up. They're kind of going up and down. What I think people forget, though, is they see these dips in these charts.
Right.
And we'll get to the Yahoo article about single family soon. And they get so excited. Oh, my God, the downward trend starting. That is not the case, okay?
No.
Look at Los Angeles. It looked like it was going down, but now it's peaked back up. People forget these types of economic cycles are not linear.
Right.
They don't go straight up or straight down.
Yes.
As you zoom in, there's lots of peaks and valleys on the way up. So don't see things like a month or two of change in pricing or vacancy and think that you're seeing a turnaround.
Right.
You are not seeing a turnaround.
They're not seeing a turnaround. And here's the problem ahead for a lot of these landlords and this is why we talk about things like the Fed funds rate and why you should know this is going to impact other industries and other sectors, right? Even if these landlords would like to convert some of these spaces into different uses, construction costs are so high. And right now, we already know.
Not to mention permitting plans.
Not to mention permitting.
Not easy to do, dude.
Getting it rezoned, right?
Mm-hmm.
So couple all that together with that. I mean, how long will it take? Who's financing construction right now during this time? I don't know of anybody. Right?
That's the thing. I don't understand who's doing a lot of this right now. Like I look at it and I'm going like, this doesn't make any sense whatsoever.
Right. So even if they wanted to convert the space, I mean, it's not. It doesn't seem feasible right now, and that's my fear. Right. Okay. Let's say they start to accept the fact that office buildings are going to remain vacant like this.
I'm sending you the one on homes right now, Arun. I know you don't have it, so continue on. Sorry.
Yeah. I don't even know.
You were talking about cost of conversion, construction.
Well, yeah, I mean, just that. I don't see it happening anytime soon. With vacancies remaining high, if they start to accept the fact that vacancies are going to remain high and they want to start converting, it's not going to be feasible. So a lot of these are. I think you're going to see more and more buildings go into receivership, and what that means when a building goes into receivership, that means that the owner of the building is no longer trying to save the property. They're just giving it up.
And there's going to be more. Well, we've already seen that, number one.
Right.
Number two, I think you're going to see more and more of it. I think you start to see the conversion stuff like that. That typically doesn't happen from the guy who owns it now.
Right.
That happens from the guy who's trying to buy it later on at a discount.
But some of these values are crazy, man. Listen to this. So the Union Bank Plaza that sold in March for $104 million, that's half of its price in 2010.
Yep.
That's fucked up. I don't even know how to pronounce this. The Aon Center?
That's right.
Did I say that right?
You did. Yeah.
The Aon Center in Los Angeles, that's the third tallest tower, has been on sale since February at an asking price below its 2014 value of $270 million.
Mm-hmm.
No offers.
Meanwhile, everyone out there is like, you know what? Single-family homes are not going to go down.
Mm-hmm.
Home price is going to go up every year for the next 5 years.
Right.
Hey, Adam, is that you in the front row? You son of a bitch.
Right. I think the gas company tower that went into receivership that we talked about,
Mm-hmm.
it's got a $465 million loan on it.
Pennies.
No one's paying it.
You can pay for that.
You got that.
I got that.
You do got that?
No, I do not got that. I do not.
Yeah, I had some listeners reach out to me.
Don't do that. Don't lie.
Oh,
everything you say next is lie.
No, it's not a lie. They said, Chris said you need 6 months of savings in your emergency fund
Mm-hmm.
to cover all living expenses.
Yes, in an ideal world.
In an ideal world.
Yeah.
Chris's Amex bill every month is how much?
Oh, dude, I got hit up today by somebody who was like, "Hey, man, you telling me you got $600,000 on the
You
account?"
tell me, yeah, exactly. Just sitting in your emergency fund?
Yes.
Wow.
I do.
Also hard.
No, it pains me.
It pains you
It pains me greatly.
that it needs to be that high? It doesn't have to be that high, man.
Bro, there's some days I'm transferring money around. Like I did it a couple days ago. I'm transferring money around.
Mhm.
So all my money, the way I manage my money is right. It all comes into like one main operating account.
Right.
And I disperse some to the household operating account, which is what my wife spends any kind of cash out of. She charges obviously the most things, the Amex.
Mm-hmm.
I move stuff from the property management accounts into other accounts. All that stuff gets auto pay. Everything else, right? So
Shout out to Oklahoma.
Oklahoma in the house, yeah.
Oklahoma in the house.
All that auto pay happens on its own, and then I'll take the net difference every single month and keep, I think, about approximately like $1,500 to $2,500 per property there. I know the net number. I don't know the actual individual property number at this point because I've just had it there for so long. And then I'll start distributing money that way, right? But I always move this money around to like pay things like the Amex bill.
Right.
The last couple of months, man, it's been like an emotional time for me.
It's been tough.
Like transferring money, I'm like,
So I know you've been.
It never gets easier.
I know you're a ways removed from this scenario, but we had a listener reach out to us and they had a question, right? Non-financial advice. They just want to know what our thoughts are. They said if you had to choose between paying down debt or begin your savings account,
Pay down debt.
which one would you do?
Pay down debt.
And that was my answer too.
Yeah, 100% pay down debt.
I said always tackle your highest interest rate debt first. You got your Dave Ramsey's out there telling you tackle the small one first. It'll get the ball rolling.
So I don't disagree with that logic, though.
It'll make because you understand behavior.
Yeah,
behavior
for his
economics.
base. And there was actually somebody else's article that I read which explained the behavioral economics, but it did a great job in saying what he didn't say. And remember, we will get to this article, so don't leave there. But his suggestion was you pay down your smallest amount of debt first. It gives you that emotional victory that'll carry you forward because you got that sense of relief.
Yes, if you know you're that kind of person, then go ahead and do that.
I've always been a proponent of pay down your biggest debt first,
right? Because
you're getting paid, you're charging the most amount of interest on the most amount of dollars.
Free up more cash flow.
Yeah, it just frees up more cash flow for you. But it's a labor of love. It's a discipline. It's not easy to do, and I feel for a lot of people. But if you're already in the position that you're in and you don't have an emergency fund, focus on freeing up your cash flow because it'll make your emergency fund a whole hell of a lot easier to do when you pay down your debt. And frankly, that's the anchor around you right now. Not having an emergency fund is probably the tertiary concern here.
Right, and then once that debt is paid down, you now know you can set aside that payment that you were making, transfer that over into your savings account.
Yeah, and to be clear, I don't hate Dave Ramsey on everything. I harp on the whole home value is going to go up every year for the next 5 years, but that's actually solid advice by him. And that there's a lot of things that he says like that's actually good.
Yeah, whatever floats your boat finds your lost remote.
I'm sorry, what was that last part?
Whatever floats your boat or finds your lost remote.
That's not a saying, is it?
It is, yeah. Andre 3000.
I love him. You know he's seen around Japan lately?
Oh, you wanted to go in on me, but once I dropped Andre 3000, you let it go. You let that go.
No, because the dude's like an icon. Yeah. And he's like rolling around.
It was either him or Big Boy.
Okay, see, there's a big difference.
That's the other member, though. Yeah. It's the other member, though.
The other member, but they were not exactly the. Okay, you know what? I'm gonna let you go on that one.
Yeah.
According to Yahoo Finance, home prices increased for the second straight month, and every fucking realtor sent this to me or like posted it.
You were wrong, man.
You're wrong, man. You don't know what's. You're wrong, man.
Yeah.
The article said U.S. home prices again increased month over month in March, according to widely watched index. Reflected the continued inventory shortages stymieing home buyers. Okay, lots of really shiny words there. Yeah. Did not explain the index, and then ultimately went into it.
Right.
And it's the one you know.
S&P CoreLogic.
The S&P CoreLogic Case-Shiller U.S. National Home Price Index rose 0.4% in March compared with the previous month, according to data released on Tuesday.
This is
March. We're in May, bro.
Yeah, we're in May,
March.
number one. And this is the 20-city composite, because we know that there's multiple indexes.
And they never tell you the composite they use.
Indices.
That was the second straight month of gains after 7 consecutive months of price declines. The index used the repeat sales method to measure home price growth. This method uses data on properties that have sold at least twice to more accurately calculate the change in each home's value. So now it's excluding certain properties to come up with what they believe to be a more accurate indication of price. And it has to be properties that sold twice. Who's been selling properties recently in the last couple of years twice when they got a super low mortgage?
Right.
Not a whole lot of that happening.
Not
but okay.
A whole lot.
Let's go on. On a year-over-year basis, home price growth decelerated again. Don't say it ain't so.
Wow.
You know how many realtors got to this paragraph? None. Not a single damn one. They're like, oh, nope, prices are going up.
Right.
Decelerated again. Housing values edged just 0.7% higher in March, lower than the 2.1% annual gain recorded in February. The index is 3.6% below its June 2022 peak.
Right. So something that we need to make sure that we're highlighting here. These are based on national averages. Okay. So depending on what region you're in, what city you're in.
We know the West Coast is impacted.
Yes.
We know the East Coast hasn't been that impacted yet. And we know the Midwest, for the most part, has not been impacted.
Right, and they're fine, right? So these are national averages. From their highs, at one point, I believe home prices were down 11%. We're now they're back up to 5%. But I fully expect this still to go somewhere, from what we said all along, somewhere within 10 to 15%, right? That's where you're still staying?
I am still saying that, and I want to read the quote underneath this article just because I want to tell people. This is all that people saw. The Case-Shiller National Home Price Index and 20-city composite show prices on the rise since 1987.
Yeah.
So now we're just going to go all the way back to 1987 and say, hey, look, man, home prices go up.
Yeah, since 1987, yeah. Yeah. So here's some of the data out there for you. Let's see. Median sale price for a home in April was $407,000. That's up by more than 7% or $7,000 in March, I'll say. So
Okay.
these are April numbers. Home prices are down 4.1% when compared year over year. On the supply side of the equation, as of April, there are 1.4 million homes listed for sale. That's the same from a year ago. In 2020, inventory was about 2 million homes for sale. If you wanted to, get that pre-pandemic, those pre-pandemic figures down. Percentage of homes sold above list in April. Want to take a guess?
It's gonna be more than I want to know.
Yeah, 33.6% of homes are being sold above the list price still.
A home in my neighborhood is listed at 2.8, sold for 3.2.
Yeah.
Sold in one
Wait, in
weekend.
your neighborhood?
Yeah, 2.8
Holy
million
shit.
list, sold for 3.2. And don't act surprised about my neighborhood like that. Don't do that to me because
Wow.
you live in a palazzo. Okay, we all can't afford these, massive properties and this construction like you got going on over there. Some of us got to live humbly. You know what I mean, bro?
Hey, you got to flex with the black card? I flex from my house.
Wow, he doubled down.
Wow. Okay, we want to talk about your house?
No,
We'll
let's
talk
stop.
about
Can you stop? This match, so that 33.6%, this matches the high end of pre-pandemic levels.
Mm-hmm.
Okay? The market is not, we know the market is not what it was 12 to 24 months ago. At that time, 60% of homes were being sold above list. So it is coming down, right?
It is coming down.
12 to
but not
24 months
rapid
ago,
enough.
60% of the homes being sold were being sold above list.
You want to know when you can stop worrying about inflation and federal interest rate increases? When home prices go down more than they have.
Right.
And yes, I still think, frankly, at this point, I think 15 to 20% is a real number.
15 to 20.
Yeah.
I'm sticking 10 to 15. But look, for the people out there listening to
Not in all markets, actually. 15 to 20% in some markets, not in all markets.
Yeah, exactly. Depends on the region, right?
Average across the country, 12 to 15%.
12 to 15. Damn.
Yeah.
Margin for error a lot less.
Yeah.
You could have gone 10 to 15, give yourself
No,
a little
I
bit
think
of
12 to
wiggle.
15 across the country is probably what we'll see. But I think it'll be a prolonged period of painful times before we get there.
Right. Last year, 6 million homes were sold. Okay. Right now, there's only 1.4 million homes for sale.
Mm-hmm.
So we know that I think the low inventory is really what's propping up this market.
Mm-hmm.
Okay. With that being said, I think 90% of the people out there with mortgages have mortgage rates under 5%. Why would they sell? They have no reason to sell. So until people start losing their jobs, right, and they don't have, we know a lot of people have less than $10,000 in savings in their accounts. We talked about it, right?
Sooner or later, unemployment will rise. Wages will come down.
Right.
Consumer spending has not slowed,
Mm-hmm.
and we have the highest non-household debt in history.
Right.
Not an overstatement, just a fact.
Right.
Okay, if we know that to be true,
Yeah.
and we know that the single largest source of net worth for most Americans across the country is the equity in their home, particularly following 2 years where home values went up, in some cases, 42% in 2 years, leading into 2023.
Yep.
There's only one source most people can go, because we've seen the numbers
Yeah.
on multiple shows about how many people can't afford an emergency expense.
Right. But you can bet your last dollar that people are going to do whatever they have to do to hold on to that. They're going to ask family members.
Mhm.
They're going to do whatever they need to do to save their house, especially that low rate.
Which is why this is taking so long to get elasticity back in the market.
Right.
Arun, I want to finalize this number because I've done this a couple times now. I believe it's 34% of inflation is rent or rent equivalent, right?
It is. Yes.
Okay. You don't have to confirm. We know that. Saied is, I forgot, is a Nobel laureate.
Soon to be.
You and Ben Bernanke are tight, right?
Yeah. Me and Ben.
You called him, right?
Yeah.
Ben.
Bernie.
Let's go to the boom boom room. With my man
Noriel.
Noriel.
Noriel's over there waiting for us.
We haven't had a Noriel conversation in a while. He's been quiet.
He's just waiting for the boom.
No, he's been in the hot tub with ladies for like the last couple of weeks.
You
He
already
probably hasn't
know.
even surfaced.
You already know.
He's out here trying to go like, you know what they love about me? My brain.
Yeah.
But yeah, so this is why things are dragging out, and I think it's going to take some time to see that change from the consumer. It's after 14 years, you have an entire generation of people who either forgot or haven't lived through what we're dealing with now, and I think the pressures are really interesting. And I know we talked the last show about the guy who trolled me, But that's such a great indicator of how people don't understand how different what we're going through really truly is.
Right.
And I'm not an economist like you. I'm not a brilliant mind.
Chief economist of the higher standard.
That's what you are.
Let's go.
I just work here. And I can tell you, I've spent probably more than most as far as time goes.
I feel bad for the people that were sold on the idea that this is going to be the greatest housing reset of our generation, right?
Yeah.
That's what hurts me because they were waiting on the sidelines. Those are the people I feel bad for. So right now,
the Peter Schiffs of the world were telling everybody it's going to fail, it's going to come down. Patrick Bet-David was out there saying the same thing.
Yeah.
A lot of people were like the doom and glooms, like it's going to blow up. And look, is there a probability of that? Yeah. Is it a slim probability? Absolutely. Do I think it's going to be the Great Reset? No.
I don't.
Do I think values are going to have to come down a little bit? Absolutely.
Yeah, but they're still going to be well above what they values raised 40%. So
yeah.
In 2010, when all those mortgages were foreclosed on, 2.9 million homes were foreclosed on. 2.9 million homes went on the market. 100,000 homes are projected to be foreclosed on this year.
Yeah.
Big difference.
And there's a lot of attorneys that are in that space that are holding out, going like, "Oh, it's gonna be great. Let's hope because attorneys made killings in that foreclosure period, just being in that space. Entire firms were propped up around it.
Wow.
And they're all thinking that this is going to happen again. And I mean, Peter Schiff and Patrick Bet-David and all those people who were like the real negative connotation people might be out there saying stuff. But I haven't heard from in a long time. Lawrence Yun over at the National Association of Realtors.
He's been quiet.
He's been real quiet.
What happened?
I don't know, man. Hasn't said a word yet. Nothing. All the people who were very vocal in the beginning, they've kind of like been drowned out.
Yeah.
Isn't that weird?
I remember. Yeah. What happened to your boy Zandy?
Mark Zandy, first of all, still not a fan.
That's your boy.
Not my boy. I literally told people at Moody's the other day, like, I don't like your boy Zandy.
Did you really?
They're like, well, we don't really talk to him that much. I said, I'll tell you why.
Yeah.
He's not a nice man.
He's an asshole.
Yeah, he big leagued me to be on the podcast. They're like, well, his podcast. And I said, I don't be this guy here. I don't like toot my own horn. Toot.
Toot.
You
like tooting your own horn?
1% over here. Mark Zandy way over there. Not 1%.
He's not, huh?
Yeah. Our show in the top 100. Zandy's never even seen it.
No.
Yeah. I might send him a postcard from the top 100, let him know what it's like. I'm not this arrogant normally, just when the mics aren't recording.
Yeah.
So yeah. Anyway,
he deserves it.
Yeah, you had a story about your daughter.
Oh yeah, this is actually funny. We'll end the show on this. So today I'm spending some quality time with my daughter, and she likes to play board games. And she's like, I take her over, and she picks out the game she wants to play, and she picks Guess Who. Remember that game?
I don't think I ever played Guess Who.
You know how it goes though. So it's basically there's like, I don't even know. Let's say 30, 40 people faced up, right? And there's two. She's got her set. I got my set. You pick a random card, and it's your objective to figure out who she has, and she has to guess who I have, right?
Okay.
And you ask a series of questions by
never played this game, by the way.
Okay, so you ask the person a series of questions by process of elimination. You knock down all the people, and you're left with their person theoretically, and then you guess.
Mm-hmm.
So we play this game. We open it up. We start off. She goes, she's acting like she doesn't know, and I'm buying it. She goes, is it a boy? I'm like, yeah. So she knocks down all the girls, right? I'm like, okay. I ask my question, same, because that's the easiest one right out the gate.
This would not be okay with woke culture.
I know.
Right out the gate, you've offended a lot of people.
Right out.
Yeah.
This is what the YMCA taught me, everybody.
Yeah.
Okay. So I say, great question, because that eliminates half the people right out the gate. Boy or girl? She says girl. I'm like, okay, cool. Knock down all the boys. Her next question, she goes, is your person wearing a blue hat? There's only one guy wearing a blue hat. I'm like, yeah. Knocks it all down. She's like, is this your person? I'm like, yeah. How the fuck? How did you run it back? Like, oh, let's play it again. I'm not gonna let you beat me like this. 2 questions? That's like a world record. Next thing you know, we play again. Sure enough, she does it again. I'm like, no. Something's going on here. What this girl and her brother did is they made all the characters on both sides the exact same. So her side is matching mine, right? All the people. And when you get your card, you hide the person you are because you know that that's not them. So when I hit it, she immediately checked her page, and she said, oh, I could tell who your character is just by putting down the one person. And she gamed me. A 5-year-old gamed me.
Sad part is Chris has no idea because he's never played the game.
Never played the game.
Fuck, that's smart on her part.
So, dude, and she didn't even tell me.
She tries to do this with me tomorrow night when I'm watching her.
Oh yeah, that's right. Odun got How All Night Date Night.
Yeah, I know. I heard about this.
You heard about this?
Yeah,
And
yeah.
you didn't tell me.
That you guys got date night coming up?
You didn't. You know where we're going?
I don't know where
It's
you're going.
supposed to be a secret. I don't know. He's not telling me.
You found out, bro.
Well, I mean, he told me right before we got here.
Oh.
Yeah.
What strip club is it?
Yeah, you said to my wife and I. No, we're going to a jazz lounge. I haven't done that since. Wife and I did that one time, New
A
Orleans.
jazz lounge.
He bought us tickets.
And you're gonna where's this at? Is it Orange County?
It's in Los Angeles. Apparently, it's like the number one trumpet player in the U.S. or the world. Is that what you said?
I believe so, yeah.
He bought this for you?
He bought it for me, yeah.
This has got to be a setup. He's
Yeah,
trying to get you out of the house or something.
Yeah, what's he doing?
Yeah, be careful when you come home, bro.
I know.
Yeah, something ain't right here.
I'll let
Shout
you-
out Keon Harold.
Keon Harold.
That sounds like a jazz player.
Sounds like the number one trumpet player to me.
Yeah. Keon Harold, everybody.
Yeah.
Yeah, that makes sense.
I'll let you know how it goes.
Is there anybody who plays jazz flute?
No.
All right. Well, tell him, Saied.
Good night, everybody.
Bye.